Lemonade Stock, a relatively new, publicly traded insurance company who don't appear to be scam artists. In fact, they appear to be for the people. They are winning the race to disrupting this massive industry worth over $5 trillion worldwide. What is happening, investors? It is your boy Jack. I am not a financial advisor. Check it out. New t-shirt, people. I know I'm a little bit late to this one, guys, but I've done a lot of research into them at this stage, and they are an extremely interesting company. When you think of disruptive innovation, you don't think of insurance companies. That is traditionally boring. You think of space. You think of Virgin Galactic bringing you or me to space to experience microgravity. You think of Tesla, of Elon Musk, of self-driving cars, things of the future. You don't think of insurance. But that is exactly what Lemonade is trying to do. They're trying to disrupt this traditionally boring, traditionally hated industry. People in general don't like insurance companies, okay? But you have to pay for them. If something goes wrong, you know that little small print at the end of the page, you know that they're going to do everything they can to not pay you out, despite the fact you've paid your premium potentially for years. And that is where Lemonade comes in. They are like no other insurance company for many different reasons. The two founders of this company have been tech entrepreneurs for decades. And to take the words directly from one of the founders' mouths, Daniel Schreiber, I definitely said that wrong. I always say these names wrong. The more we thought about it, the more we realized that insurance may be the largest disruptable industry on the planet. So once you do start looking into this company, things get very exciting. They're not like most companies you look into. There are some absolutely fantastic prospects, and I'm going to try to cover as much as I possibly can in today's video. Right before we get into it, can I please ask you to smash a like on this video, as it genuinely helps me and the channel out so much. I would really appreciate it. Please hit that juicy red subscribe button if you're new around here. We are on the road to 20,000 subs, people. It's insane to be saying that. I hopefully will have this merch and all of the new merch that will come with it ready to go by 20k, so here's hoping. And drop me a comment down below. This is already a publicly traded company, so let me know if you're invested, what price you got in at. Let me know what you think about the company. With that being said, guys, let's get into our juicy information. As we always do on this channel when we're looking into a company for the first time, we just start off on the website. The first thing we see, Lemonade. Forget everything you know about insurance. Instant everything. Great prices, big heart. So contents and liability insurance built for the 21st century, and instant everything. This is the first very exciting piece about this company. Maya, our charming artificial intelligent bot, will craft the perfect coverage for you. It couldn't be easier or faster. You don't have to go out to a broker. You don't have to fill out loads and loads of paperwork. You just need to go onto their app, fill out some questions, and their AI will give you a quote. And they have some extremely, and I mean extremely attractive prices, and we will compare that to the industry as a whole very shortly. How Lemonade works, okay? Lemonade reverses the traditional insurance model. We treat the premiums you pay as if it's your money, not ours. With Lemonade, everything becomes simple and transparent. We take a flat fee, pay claims super fast, and give back what's left to causes you care about. So a flat fee to run everything, that's what Lemonade gets. We pay claims super fast, and if there's anything left over at the end of the year, we give it back to causes. They give it back to non-profitability charities. So this takes out a lot of trust issues that people have with insurance companies, because Lemonade won't actually benefit monetarily from not paying out your claim, because they simply put take a flat fee. If they have more money at the end of the year, all it means is that a charity is going to get more money. It's not going into Lemonade's pockets, which allows us customers to trust this company a whole lot more. Because right now, let's say you have car insurance, for example, okay, and you pay your car insurance, and then you get into a crash, okay, and you go to put in a claim. The insurance company wants to do everything in their power to not give you a full payout or not give you any payout whatsoever, despite the fact you could have paid that insurance for literally decades. Reason being is if they pay you, that money is straight out of their profits. Whereas with Lemonade, it doesn't affect their profits. So this here, a flat fee, is absolutely massive. Now what I will say in the small print here, subject to board discretion and the company meeting certain financial standards. Some more information on that, okay, we believe in good karma through balancing profit and purpose. So we donate unused money to causes our users choose. Last year, for example, we funded a water system for a village in Africa and helped deliver tens of thousands of meals to those in need and built homes for families in Central America. This also incentivizes people not to commit insurance fraud against a company like this, because essentially they're not stealing from the insurance company, they're stealing from charities. So they have a B Corp certification, which means we meet the highest standards of social and environmental performance, public transparency and legal accountability. So a lot of people people might say, well, they could just be saying that for the website and pocketing the money. They're B Corp certified people. And just to understand how exactly they plan to use the money, what order it goes in. First of all, they keep a fixed percentage of all premiums. Okay, this pays for developing cool tech, running an insurance business, salaries, rent and such, and making a profit. Every business has to do that. So job number 1 is to ensure we can always pay claims. Job number 2 is to give back money that isn't needed for job number 1. So a big chunk of premium goes to buy reinsurance, and this is essentially insurance for insurance companies. So if there's a particularly bad year, they have enough money to pay out. I watched this great video on YouTube. It's actually on one of the founders of the company's YouTube channel, and he went through this very well. But essentially, imagine one year there's earthquakes or there's tornadoes and there's a whole lot more claims. Well, the insurance company ultimately needs to be able to pay them out. Their premiums for that year may not cover it, so they have to have reinsurance. Data scientists estimate up to 40% of premiums will be available to give back to our causes our policyholders care about each year. It is a very simple business model, and it's one that we can trust more than a lot of other insurance companies. So there is some very important stuff in their SEC filings that I want to do, but you know, on this channel we like to go through the more basic stuff first, then get into that. So I have a few articles that just have little nuggets of information that I really want to bring to your attention. They are already well on their way to reaching 50% of the US population. Lemonade's renter's insurance starts at $5 a month, and home insurance for as low as $25 a month, which is up to 80% cheaper than its competitors, while it takes less than 90 seconds to purchase it. This is disruptive technology, people. And remember, I just said I watched that full video. It was a half-hour video. I love the founders. I love them. They seem so genuine, just so real. I do, after this video, recommend you watch that if you're thinking about investing. It'll make a lot of things very clear to you. So their prices are incredible compared to the competition, which you're going to see now, okay? And one of the reasons is it is available 24/7 with a bot who creates a $5 policy in 90 seconds with zero paperwork. Big insurance brokers, big insurance companies, they're not open 24/7, okay? They don't have bots to do all of this work for them, so they have to charge higher fees. Also, they pay out so incredibly quickly. About 33% of their claims get paid out on the spot by a different bot. I believe his name was Jim. Yes, how AI Jim broke a world record without breaking a sweat. So somebody lost a coat, okay, a very expensive coat. He entered the details of his Canada Goose Langford parka in his Lemonade app. It had cost $979 and was bought at Saks Fifth Avenue. Sending a tweet would have required more taps. He spoke into the camera and described what happened, which took 61 seconds. And at 5:49 and 7 seconds, he hit submit. So this process had taken a few minutes and no paperwork. And within 3 seconds, his claim was paid. This is disruptive, people. I'm sure if any of you have ever had to put in an insurance claim, you understand the heartache it causes. You understand how many hours it can take. This took the man a few minutes, start to finish. He didn't have to go see anybody. He didn't have to travel. He didn't have to pay expenses. It just happened. And as I said in that video I watched by the founders, this happens about 30% of the time without any human ever having to get involved. 3 seconds. 1, 2, 3. That's how long it took, people. And it's 82% cheaper than the competition's price. It's the best service and it's the cheapest by an absolute long mile. Not even speaking from an investor's point of view right here, this is just amazing, okay? This is the insurance company I would be using 100%. I can pay less, support charity, and get my payouts quicker and without all of the hassle. Makes sense. Now this website says they're about 68% cheaper, but you get the picture. They're a lot cheaper regardless. Now this here is a company presentation. It's not as clean as a lot of other ones, but again, I always like going through these. It's actually done as a slideshow, okay? So the problem, buying home insurance is complicated and tedious. That's where Maya comes in. We've already spoken about her. She's the one who gives you the quote, okay? We go on. Do you want to rent or own? Okay. Do you have any of the following in your home? One sec while I crunch some numbers. It's very, very simple. Anybody could do it. $500 million valuation. $38 paid for every $1 earned. We've been through the business model, okay? But if we go to the next one, we can say that 80% is to pay claims, 20% kept as fees, and the rest is donated. So obviously those 80-20 are guidelines. Nothing's going to be exact. So what's hot, okay? Artificial intelligence. Absolutely massively. Artificial intelligence is what disruptive technology involves. And then social impact, charity. Of course people are going to love that. They have a history in funding, okay? Total funding so far $60 million. This was obviously pre-IPO. There is a lot of competition right now, but that's fine. Look at this, okay? Bought first policy before the 1st of the 1st 2017. 0.9% were those who bought Lemonade, okay? Bought first policy since the 1st of the 1st 2017. 27.6% people. Prediction: as more millennials rent and buy homes, they look for simple and easy to understand options. And this is very true. With a growing user base and expansion into more states, consumer ratings will determine whether the company is able to succeed. And so far, they have some absolutely incredible consumer ratings. And just to show you guys where they actually are right now, okay, they're largely in the US, and then they're also in Europe, in both Germany and the Netherlands. And it says coming soon pretty much everywhere in Europe and America very soon. So some more about the growth and things like that before we get into the S1, and before we get into potentially some of the downsides, because we always have to acknowledge the risks as well as the good. 0 to 100 million in 3 years. 500% growth. 10% market share, ranked number 1 by consumers. This is a graph I saw in that YouTube video I've mentioned a couple of times now as well that I really liked. This is what they do. Delight customers, grow fast, get predictive data through their AI, and the machine learns. And delighting customers, building customer relationships, keeping customers happy does genuinely seem so important to this company. Again, speaking about that YouTube video earlier, that was the first thing that the founder brought up. Lemonade has climbed to become the people's choice on pretty much all the destinations where insurance companies are evaluated. ClearSurance, I'm aware, is a massive one in the US. Lemonade is the highest ranked insurance app and one of the highest ranks ever. In their 2019 State of the Cloud report, Bessemer Ventures shared a benchmark for how many years it takes good, better, and best tech companies to grow from $1 million in annual recurring revenue, known as AAR, to each of $10 million and $100 million. So 1 million to 10 million, best 2 years. Lemonade, 10 months, year from 1 million to 100 million, best 5 years, Lemonade 2.5 years, people. The growth has been amazing. And here you can see it, guys, their annual recurring revenue. That is some absolutely immense growth. This is quite cool as well. The percent of Lemonade condo owners who started as Lemonade renters has gone up and up over time. That's really cool. There's been a 500% compound annual growth AAO rate, 290% improvement calendar quarter loss ratio, and they should only become more and more efficient as time goes on, okay? Because right here we can see the percentage of support tickets handled by AI was 7% the start of 2018, is 26% towards the end of 2019. 3 years by the numbers. A whole lot of information here. Welcomed over 18 million visitors to the website. Responded to nearly 1 million inquiries. Sold over 1.2 million policies including renewals. 100% of them by the AI. See nearly 1 million app downloads, so much more. Now, let's get into some financials. So they dropped their S1, which I will go through a little bit more after this article even, revealing sharply rising revenue and net losses. So in April 2019, it was reported that Lemonade had raised $300 million in Series D round led by SoftBank Group. The financing reportedly valued the company at more than $2 billion. In total, Lemonade had raised $480 million since its 2015 inception. It also secured $120 million Series C in late 2017 that valued the company at $620 million. So in its S1, the company's revenue skyrocketed by nearly 200% in 2019. At the same time, however, its net loss was up by 105% to $108.5 million. Now, this is something we do see often in companies who are just going public, people. I know this in itself will be enough to put a lot of people off, but for me, you know, somebody who's willing to take some risk sometime to get into what could be the next big growth stock, this doesn't put me off too much. And their market cap is currently at just over $4 billion. So in its risk factors, Lemonade said it expects that its net loss will increase in the near term as it continues to invest in growing its business. This is something that we often see, guys. Net loss is up because they're investing so heavily in growing the business to become a profitable business. The company also said that it has not been profitable since its inception in 2015 and had an accumulated deficit of $198.3 million and $234.8 million as of December 31st, 2019 and March 31st, 2020. Its headcount grew, with 329 employed at the end of the first quarter compared to 279 at the end of last year. The expenses are going up massively because they want to grow, they want to expand. The number of homes they insure grew to 425,000 in 2018 compared to just over 100,000 at the end of 2017. The growth as well has been amazing. Just keep in mind, guys, you know, usually when you get into the next big company, if that is to be Lemonade, it could well not be. They're going to not be profitable when you get in. Okay, and then let's finally just actually have a little bit of a look at the S1. So I know these aren't exactly the most exciting things in the world, but there is always some useful information. So we have a few little graphs here, okay? Their gross written premium, GWP, up massively. Net losses per dollar of GWP, down. And their gross loss ratio also down. Why we love insurance. Insurance is one of the largest industries in the world. Property, casualty and life insurance premiums amount to approximately $5 trillion globally and account for 11% of the GDP in the United States. Massive. And I mean massive market opportunity. In the US, 12 of the Fortune 100 companies are insurance companies. And their average age is about 125 years old. insane. While the world's top insurance companies each generate over $100 billion in revenue, no single company has a market share greater than 4%, underscoring the sheer scale of the industry. An incredible industry to try penetrate and try be disruptive in. Appeal to the next generation of customers. Approximately 70% of our current customers are under the age of 35, and about 90% of our customers said they were not switching from another carrier. We've achieved this outsized share among newer cohorts through a three-pronged consumer value proposition, which we've already covered pretty much everything there: the delightful experience, the values, and the great prices. So the business model, leveraging technology in everything we do. We see that with the AIs, Maya and Jim. Alignment of our interests with those of our customers. That is what is very different to any other insurance company in the world. And then strong retention rates and a subscription-based model. This is, remember we went through the AAO earlier, the annual recurring revenue. It's important to keep your customers paying. There's more than just Maya and Jim as well. CXAI. Our bot platform is built to understand and instantly resolve customer requests without human intervention. About a third of all customer inquiries are handled this way, so I did know a little thing earlier in the video. Our forensic platform utilizes the combined power of behavioral economics, big data, and AI to predict, deter, detect, and block fraud. Blender, our insurance management platform, facilitates robust collaboration among our customer experience, underwriting, claims, growth, marketing, finance, and risk teams. And Cooper, our automation bot, handles complex and repetitive internal tasks to drive efficiency across our organization. So growth opportunities, okay, they need to acquire more customers. Obviously, every company needs to do that. Grow with our existing customer base, okay? As our customers move up the economic ladder and through life cycle events, keep in mind this is predominantly relatively young people. Their coverage needs typically expand, enabling us to increase revenue per customer. They need to launch new products. That's very obvious. They don't offer as much as a lot of companies do right now. And they need to expand into new geographies. That's quite obvious. You know, young people, we're more open to things like this. Some older people, you know, people in their 50s, 60s, even 70s, they all need insurance too, and they're not as tech savvy, so they need to figure out a way to get those people involved. If there's any 50, 60 or 70 year olds watching this, I don't mean any offense. The EBITDA margin has been getting better and better every single year by far. Now, our challenges. This is something I always like to look at when I'm looking into a company for the first time and considering investing. There's a history of losses, and they may not achieve or maintain profitability in the future. Our success and ability to grow our business depends on retaining and expanding our customer base. The Lemonade brand may not become as widely known as incumbents brands, or the brand name may become tarnished. Now keep in mind they have to put in as many risks as possible, so one like that, it's obvious it goes for literally any company in the world, even the most well-known companies out there. Denial of claims or our failure to accurately and timely pay claims could materially and adversely affect our business. So far they've shown that this is not an issue. They own a world record for handling a claim the quickest. Our future revenue growth and prospects depend on attaining greater value from each user. The novelty of our business model makes it efficiency unpredictable and susceptible to unintended consequences. That's how disruptive technology works. We could be forced to modify or eliminate our give back, which could undermine our business model and have a material adverse effect on our results of operations and financial condition. I don't see this happening. The only reason I would see this happen is if times got extremely financially difficult. They're currently undergoing but have not yet completed a full scope examination by our primary state insurance regulator, which could result in adverse examination findings and necessitate remedial actions. Remedial? Why did I say remedial? Remedial actions. In addition, insurance regulators of other states in which we are licensed to operate may conduct periodic examinations. The results of these examinations may also give rise to regulatory orders requiring remedial, injunctive, or other corrective action. To me, these risks right now are just ticking the boxes. These are things you have to have on your S1. Our limited operating history makes it difficult to evaluate our current business performance. We may not be able to manage our growth effectively. Intense competition. Reinsurance may be unavailable at current levels and prices, which may limit our ability to write new business. Now, this is a real risk for a new insurance company. The rest of these are kind of just ticking boxes, but this is one that we do have to be somewhat worried about, especially given the fact that they're not profitable. In the early stages of this company's life cycle, okay, if there were some really bad years strung together in a row, it could lead to a very difficult time. But again, that is one of the risks that would come with any relatively new insurance company. Security incidents or real or perceived errors. Essentially here, if they wouldn't protect data, which they obviously will, and they're subject to extensive insurance industry regulation. So to me, the risks are what you'd expect. There's nothing terrible there. When you're investing in a relatively new publicly traded company, despite the fact, you know, they've been growing so quickly over the last 5 years, there's going to be more risk associated than a company who's been publicly traded for over 50 years. It's just the way the world works. And then when you're investing in a relatively new publicly traded disruptive technology company, it gets even riskier. It's just the way it works. It's the risk versus reward cycle, you know. The higher the risk, the more the reward. So if you're looking for the big rewards, you're gonna have to take some risk. But the main thing I wanted to bring you guys through was the risk factors. So, you know, obviously S1s are very, very long. If you are looking into this company, I do recommend putting a lot more time into this S1. I personally will be. That's why I'm not going to invest yet. But that's why I like to start off with all of the simple stuff. So when you do that basic research, it's a lot easier to read through an S1. A lot of it will repeat itself. You'll have a good understanding of the company already. So ultimately, do I plan on buying the company? And the answer is not right now, but because I need to do more due diligence. I have a decent understanding of the company, the financials, etc, etc. I need to look through a lot more of that S1 to decide if I will invest. Upon initially having a look at them, I do really like the look of it. I mean, I love disruptive technology. I think we all know that at this stage if you've been on the channel for any period of time. And Lemonade is essentially the first disruptive company coming into the industry sector, which is an absolutely huge sector. I just personally, to be confident investing in them, need to do a little bit more research, figure out what price I'd be happy to get in at, and I don't think you're going to miss out if you don't buy them in the next few days. Again, if we look on the monthly chart, there's been a lot of little sideways trading here and there. I think there's still a lot of time, you know, to do your research, do your due diligence before you have to rush into anything with this company. Now, I wouldn't be against opening a small position even at these prices, to be honest, but again, I'm not in a rush is how I'll put it, but I would not be surprised if I do ultimately end up investing in this company after doing a little bit more research and building up a little bit more confidence. But there we have it, guys. That was Lemonade. If you watched until the end of this video, I appreciate you so much. Thank you for giving me your time, and hopefully in return I was able to give you some sort of value, some sort of insight into this very exciting company. I know I wasn't the first to make a video on this one, but honestly I've just been looking into so many companies lately, they kind of got put on the back leg, but I finally felt ready to make this video. If you do enjoy and you have watched till the end, please help me out massively by hitting that like button if you haven't yet, and dropping me a comment down below. Those two things genuinely help me out so much. I would really appreciate it. I do still read every single comment, and I reply to the large majority of comments. I just don't reply to the ones that don't make sense or are essentially negative, because I ain't gonna waste my energy on them when there's loads of people supporting the channel. But if you do drop me a supportive or relevant comment, I will get back to you. And with that being said, guys, I hope you all have an absolutely fantastic day. I will see you for the next video. Peace.